All right, let's get right into it. You ever have that feeling deep in your gut that the game is, well, rigged? Like, no matter how much deep dive DD you do, there's some invisible hand out there that's always one step ahead of you? Yeah, well, guess what? That feeling is absolutely correct. And today, we're ripping back the curtain on how the suits use their all-seeing eye to play a completely different game than you are.
Look, forget your charts, forget your fundamentals for a second. The real signal, it's being beamed down from orbit, literally. The suits are tracking everything, and I mean everything, from cars in parking lots to the location data on your phone. And they're using all that data to front-run the market before you even see the ticker move. Let's call it what it is. This isn't investing anymore, it's a data heist.
So what's the story they feed you on the mainstream finance channels? You know, the one designed to keep you nice and calm and playing their game? Yeah, let's take a look at what I call the Suits fairy tale. They give you these super simple, clean-sounding rules. US Bank tells you to use the rule of 100. Just subtract your age, and boom, that's how much you put in stocks. Isn't that cute? But the reality, as anyone who has lived through a real market crash knows, is that this kind of advice just completely falls apart under pressure. People panic. They sell at the absolute bottom. Why? Because the official story conveniently leaves out the single most important part of the equation: psychological warfare.
Okay, so let's just toss that fairy tale in the trash where it belongs and step into the ape reality. This is how the quants, the hedge funds, how they really get their edge. It has a name: alternative data.
So this is the real map of the market. Forget PE ratios. We are talking about a massive web of 24 different kinds of alternative data. I mean, look at this stuff. You got the obvious things, right? Like satellite pictures and credit card data. But they're also tracking weather patterns to guess crop yields. They're scraping social media to see if people hate a new brand. They're even looking at employee satisfaction reviews. It is a gigantic, tangled web that gives them a crystal clear, real-time picture of the entire economy.
Let me show you a classic example. Hedge funds were literally paying for satellite photos just to count the cars in Chipotle parking lots. And wow, just look at that gap. You see the car count? That's the green line. It started to nosedive way back at the end of 2014. The stock price? It didn't react for almost a full year later. They basically had a time machine. They knew earnings were going to be a disaster before the company itself probably did.
And this one shows perfectly how they use your own data against you. This chart is tracking foot traffic from mobile phone location pings. Look at the orange line for RadioShack. It's totally flat during the holiday season, while Best Buy is spiking like crazy. They didn't need to read a single financial report to know RadioShack was toast. They just had to watch where you were walking.
And the sheer scale of this is it's staggering. Back in 2017, just one firm was already tracking over 700 of these different datasets, and they predicted that number would skyrocket to 5,000. So this isn't some tiny niche strategy. No, this is the new foundation for the entire game.
So, the big question is, does it actually work? Well, according to JP Morgan themselves, just by analyzing consumer spending data, a strategy could pull in an insane 16.2% in annualized returns. That's what we call massive, consistent alpha. But here's the thing, just having the data isn't the whole story. The real secret is how they weaponize it. So just keep that 16.2% number in your head.
Okay, so having the data is one thing, but the true professionals, they combine that surveillance with straight-up psychological warfare. See, it's not good enough for them to know you're going to fold your hand. They want to make you fold. And this is where we get into the mind games and, of course, FUD.
Yeah, FUD. It's the primary weapon in their entire arsenal: fear, uncertainty, and doubt. It's an old tactic, and it's designed to do one thing: destroy your confidence and make you panic. They don't just predict that a fire is coming, they show up with gasoline and matches. I mean, this is straight out of the manipulator's playbook, right? You create a story that blames the target. Blame the company, blame the CEO, you can even blame the retail investors. By doing that, you put everyone on the defensive, you manufacture a crisis of confidence, and suddenly, your data-driven bet becomes a self-fulfilling prophecy.
And here is a perfect example, caught by Apes right on the front lines. A hedge fund uses its data, sees a weakness, and takes a massive short position. Then, like magic, a storm of negative articles and a BS class action lawsuit just appear out of thin air. And like this user points out, the lawsuit itself costs the company millions and crushes the stock price, whether it has any merit or not. The damage is the point.
So let's put all the pieces together now.
You take the all-seeing eye of alternative data, and you combine it with the psychological warfare of FUD. This right here, this is the glitch in the matrix. This is the playbook they use to literally manufacture reality.
It's a simple, brutal, and scarily effective strategy. Step 1. Use the data to find a target and go short, hard. Step 2. Orchestrate the media attack. Pay for negative articles, plant seeds of doubt online, the whole shebang. Step 3. Launch legal attacks to create a constant stream of bad news. And finally, Step 4. Cover your short for a monster profit. While all the retail investors are panic selling out of fear,
Just look at this. This table shows the credit scores for a bunch of shipping companies. See Hanjin Shipping down at the bottom, the one that's circled? Its score just plummets from a 3 all the way down to a 1 over 9 months. This is basically precognitive finance. For a fund that has this data, Hanjin's collapse wasn't a shock. It was a scheduled event they could trade on months before anyone else knew what was happening.
And now we close the loop. Remember that 16.2% return I told you to keep in your head? Well, this chart shows you exactly how they get it. A basic S&P 500 strategy gets you about 13.5%. Okay, a more complex strategy gets you to 15%. But look at that top bar. A strategy that layers in all that alternative data delivers over 18.5%. That difference, that extra 3, 4, 5%, that is the alpha they are pulling out of the market with their all-seeing eye. And make no mistake, that's your money.
Okay, so they have satellites, supercomputers, and an army of psychologists on staff. The game is rigged. So what do? How do we possibly compete? The answer is, you don't. You can't outspy them. So you have to play a different game entirely. You have to outthink them, and you have to exploit their biggest weaknesses.
And you know the drill. Here's the mandatory disclaimer. This is not financial advice. It's educational banter. We're just a bunch of apes with keyboards breaking down game theory. The market is a casino, folks. We're just showing you how the house counts the cards. Always do your own damn research.
So this is our counterplay. This is the ape arsenal. Let's break down the strategy. First off, their entire model is built to exploit predictable human behavior, right? Panic selling. The counter to that is diamond hands. And it's not just a meme. It's a psychological defense. It's an act of reclaiming your focus. It breaks their models. Second, they have a monopoly on data that costs millions. Our answer is crowdsourced DD. They have a few dozen analysts. We have literally thousands of apes digging through every single filing. Third, their algos are built for short-term gains. Our edge is time. By hodling, we can survive the kind of volatility that would blow up their leveraged positions. Their whole playbook is designed to make you feel isolated and panicked. And that's why our ultimate weapon is unity. Apes, together, strong. We are watching this chart like a hawk. While you wait for the next candle, grab your free gear. Sign up for Public to get $20 in free assets, check Webull for that BTC promo, or grab your NVDA stock on Moomoo. Links are in the description. Smash the like, subscribe to the tribe. Apes together strong. So I'm going to leave you with this question. On one side, you've got billions in technology and an ocean of data. On our side, you've got a community, a shared belief, and a collective refusal to play by their rigged rules. The suits have satellites. We have the subreddits. Who do you think has the real alpha in the end? Let us know what you think down in the comments.